Hey everyone, Coach Investor back to another video for today. So I hope you're all having a wonderful weekend so far. This won't be the traditional what you happened with Tesla this week episode. It's going to be split into two because otherwise it will be way too long. Now, if you're following on Twitter, you know that I bought more shares the day after the earnings report. Do I think the stock can go lower? Of course. To me, I don't really care what happens in the short term. I've been in Tesla for a couple of years now. I'm only here for the long-term gain, unlike some money managers that are pretty popular, let's say, in the Tesla community. Now, again, remember, money managers are looking for catalysts one after the other so they can show their investors, look, hey, in the short term, we've made X amount of money for you guys. Even though they say, well, we have a high price target, etc., we're extremely bullish, they're always short term minded. And that's why you see some sell 1/3 of the position, some sell each and every quarter or so. Yes, sometimes to rebalance, etc. But really, if you are so, let's say, convinced that it's one of the best investments out there, I think the behavior should speak volumes. Anyways, in this video, let's focus on this quarter, what I think a lot of people missed, what I think a lot of people got right as well, because this wasn't an amazing quarter, right? Let's be honest. But does that matter? No. Look at the bigger picture. How is the competition doing? Are they having exceptional quarters? Are their margins so high? No. The answer here is clearly no. But let me start by asking you a couple of questions and telling you a little bit of, let's say, an anecdote, if I might call it. So, SpaceX, right? They launched Starship. We had a liftoff, which was amazing. We did a live stream here on the channel. Now, we had liftoff, and then a couple of minutes later, the rocket exploded. So what happens there? Well, you have SpaceX engineering cheering all the time because they know, they are the experts here. They know that this was a huge milestone. They got that rocket off the tarmac if I might call it. And then yes, okay, it exploded. But the fact that they had liftoff, the fact that it went up for what, a minute or two or three, is already pretty valuable for them. Then on the other side, you have the so-called expert that don't really know much. Like, SpaceX launched a rocket, it exploded. Wow, really tremendous job reporting on this. The same thing can be applied with Tesla. Each and every time where Tesla misses a little crucial point for Wall Street, it's like, oh, doomsday, Tesla is losing it. Their margins are going away, etc. When margins are still, what, at 19%, whereas the competition is where? 75, 80% lower? Come on, let's start being realistic here. Now, of course, I need to talk about the negatives, and I'm tired of hearing these FSD promises. As I've said countless times on this channel, to me, FSD, the robot, disregard for now. For me personally, of course, if it works out, it's going to be incredible. But for now, since we've been promised year and year over and over again about, well, FSD is coming, and yet again, Elon on the earnings call couldn't help himself but say, maybe I think we could reach it later this year. I mean, why? Why say it? Just keep it for yourself. Now, a couple of extra things here. When you have, let's say, an earnings report that is maybe below expectations or something drastically has changed, right? Like we've done some price cuts pretty aggressively, so margins have come down. So the job of an investor relations person, I'm not saying he's a bad one, but if you go and listen to From Growth to Values interview with Fede about Nubank and Melly, which is where he was in the investor relations person, the way they worked is pretty simple. If during a couple of quarters, let's say, margins are coming down because you want to invest a lot, you want to grow, well, you want the future of the company to be secure. That's why you're, let's say, spending or overspending in investments, etc. That's why margins are coming down. At least explain it in a good way and then maybe add some other valuable metrics that usually aren't in the earnings report to, let's say, I won't say cover up the margin hit, but add more information to make investors maybe believe the move and see where the company is actually going. I think that's a crucial job for investor relations person, but maybe that's just me. Anyways, before I continue with my stories here, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couch investor. So let's start with the first most important thing, and that could probably summarize why Tesla is where it is. So in the current macroeconomic environment, we see this year as a unique opportunity for Tesla, as many car makers are working through challenges with the unit economics of their EV programs. We aim to leverage our position as a cost leader. We are focused on rapidly growing production, investments in autonomy and vehicle software, and remaining on track with growth investments. Now, to me, this should give you enough to be, let's say, relaxed, despite all the other results in this earnings report. Just take Tesla and compare it to all the other competitors out there. And again, not just EV makers, but all the competition out there, right? There's no EV market share, as they say. There's just the car market share. Tesla right now is in a very, very good position to do what they do best. Driving costs down, ramping up production, making sure you get the best car possible, making sure that the margins are still industry-leading margin by a wide margin. Even if next quarter, let's say, margins come down another percentage points or so, it's still so far ahead of the competition. Now, of course, I agree, and this is why Tesla gets a higher multiple than the competition. 100% agree. But let's not forget in what type of market we are in today. Let's not forget that probably in the last couple of years, when rates were close to zero and auto financing was also much cheaper than today, probably a lot of people already bought a car, whether it's an ICE vehicle or an EV vehicle. So right now, if rates are so high and auto financing is much more expensive, I mean, usually you're not going to, oh, I just bought a car 2-3 years ago, now let's buy a new car and pay even more. No, it's just not the way it works. And also, when it comes to these people that are calling out, oh, the branding is damaged because price cuts, etc. Well, yeah, okay, if that was the case, Model Y was the best-selling vehicle in Europe in Q1. Model Y was also the best-selling vehicle in the United States in Q1, excluding pickups. I mean, come on, these excuses of these short-term thinking people are getting really, really tiresome. And also, I don't know, have we forgotten that, as they say, in Q3, the Cybertruck will get delivered or handed over? There is an event that's going to happen. I mean, did we forget that there is over 1.5 million pre-orders for that? Even if, let's say, only half of those, or let's say only 10% of those people that have pre-orders are taking delivery, still, the order backlog here will take a lot of time to get through. Now, I'm sure you've seen this report already countless times in the last couple of days, so I'm not going to bore you with the same numbers over and over again. Yes, as you can see, total gross profit is down, total gross profit margin is down as well year over year. Same for income from operations, operating margin, they're down. Only positive thing here I can see, well, not only, but one of the major positive things here is energy generation and storage revenue that has increased quite a lot year over year, 148%. Yes, free cash flow is just $441 million. I think regulatory credits were just over $500 million, a bit higher than I think what a lot of people were expecting. But again, it's just one quarter. I would really, really like to see how the competition is doing right now when it comes to margins, because I don't really think they'll come close to what we're seeing here. And also what they said during the earnings call is that, well, price cuts obviously hit margins, and now we already had price cuts for Q2, so that will hit margin as well. But in Q1, we had those one-time recurring impacts, so that shouldn't really, let's say, go over Q2 or Q3. Maybe there will be other ones in Q2 and Q3, remains to be seen, but the impact on margins in Q1 were affected by those one-time recurring hits. Now, when it comes to market share, you can see this picture right here. I will zoom it in so you can see it much better. EV market share, of course, Tesla is, let's say, quote unquote, losing market share. It's not because it's not producing or selling more and more cars. No, it's because that market becomes bigger and bigger as the ICE vehicle market becomes smaller and smaller. So I think people with brains know exactly where to look. So look at the overall market share, the car market share. And the picture here says it all. Tesla is growing in US and Canada, Europe, and China. Of course, EV market share will become smaller over time, but if you look at the units, that will only grow up from here. Then last couple of things here, energy storage. Again, I think we can feel that this is a bit similar to the car business back in 2018, 2019. We are suddenly going to see extreme growth here. Of course, during the earnings call, they mentioned that they will be looking for this segment to be around also mid 20% margins there, which a lot of people were disappointed because some people were talking about 50% margins. Again, they're talking about the overall energy business, could be 25% or so, which means that maybe Powerwalls or Megapacks could be higher. Solar could be extremely low. Powerwalls could be, I don't know, between both. And that's why overall on average, you'll have 25%. Anyways, overall, if you look at, well, the bigger picture here, even though this isn't as big as it should be, but this is the last 3 years or so, you can clearly see vehicle deliveries going up. Of course, operating cash flow, free cash flow, I would have loved it if we can continue to go up or at least stay flat-ish. But I understand current macroeconomic situation, their investments. I mean, this is what is happening right now. In the future, I fully expect these charts to look like the vehicle deliveries going up to the right. Now, I didn't hear one comment or questions about the, well, Mexico factory and what happens next there. Of course, as we've seen with Giga Berlin and Austin, right? Money burning furnaces. Expect the same thing to happen there. Ramp up takes time, takes a lot of money as well. But once you're ramping up, well, sky's the limit. So to conclude this part of the Tesla subject for the week, was this quarter great? No. Was this quarter okay? In my opinion, yes. Is Tesla still the leader in the EV revolution? Yes. Does it still have industry-leading margins by a wide margin? Yes, again. Will Tesla become more profitable than the rest of the industry? Yes. Will they keep that status for years and years to come? Yes. Do I believe that FSD will be solved later this year? No, I do not. And on the topic of FSD, remember, giving things for free or at a very low profit margin is not something new. It's something that is happening in each and every industry out there. Fuel companies, for example, are giving away cars for free. Why is that? Because they want, or they tell the people that get those free cars that they have to refuel using their fuel. You have free apps. How do these apps make money? Guess what? In-app purchases. With Tesla, you buy the hardware, you buy the car. What happens next? You can buy FSD, you can buy software. That's how they make more money. Android, giving the software away for free, quote unquote. What happens next? Well, licensing fees, Google Play Store, etc., etc. This isn't something new. This tactic has been used for years and years in other industries as well. Keep that in mind. Anyways, that will be it for me for this part of the Tesla topic of the week. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I see you all in the next one. Bye bye.